We're very, very pleased to have our knowledge partner McKinsey here with us on stage again. We invited McKinsey Simon Kessler and Jörg Moeshoff not only to share their vision on the future of insurance, but also to take stock on the current state of the industry and what is required to make the essential next leap. Boost or bust, they say, so you better buckle up. Thanks Simon and Jörg for joining us here in Munich.
Yeah, hello everyone. Indeed, we chose the title Boost or Bust because we believe, I think we are at an important point in the insurtech space at the moment. I mean, we see the market movements, I mean, all the uncertainty, but we also see, I think, a lot of reasons why I think there should be hope and optimism looking forward. So with that, let me start by giving a bit of an overview of our view on the future of the insurance landscape overall. First of all, I'd like to say that the insurance landscape is a very large, stable and profitable industry. I think this is not the case with all industries. And this is, I think, of course, first reason for optimism. I mean, the industry has not suffered much during COVID, to be honest. Also, the outlook is extremely positive. We believe growth will continue, profitability will continue in the next couple of years. We also see, I mean, that the insurance industry as a whole was not suffering a lot on capital markets compared to other industries in the last year. So there is a very healthy underlying industry, which is of course very helpful for the insurtech space. Then, I mean, of course, we had 2 years of COVID. And lots of uncertainty there. And generally, the belief insurtechs would benefit a lot during that time. People would move to digital channels. And the answer here and the observation, what happened in the last 2 years is, yes, it happened partially, but not everywhere. So on the one hand, you see, we took one KPI here, claims notified online, from a panel we do with a large set of UK insurers. There you see really an uptick after COVID hit, so people really moved to digital channels to do notification of claims, for example. We see it in other parts of the value chain. At the same point in time, you see on the right-hand side that the share of digital distribution has not changed much. So the number of people buying insurance policies online, I mean, is still fairly low, significantly below 20%, and even going down slightly. And the reason for that is it's a bit counterintuitive, but people were not really thinking about insurance a lot in the last 1 or 2 years. I mean, it was not on top of their mind. They didn't switch. They didn't go to aggregators. So you saw also less aggregator business, less switching behavior. Of course, renewal prices were also lower in some of the most important products like motor. So there was less of a need to change, less of a need to go digital. This might change now in an environment with higher inflation. But during COVID, actually, not much has changed there, surprisingly. Then, at the same time, I mean, the whole insurance industry is, of course, experiencing lots of transformation. So you see all these buzzwords and many more that we put here on the page, increasing polarization everywhere. For example, we see winners winning more and more and more. So the ones that digitized early and with significant energy, they can benefit now, while others, I mean, lose ground. We see lots of investment into analytics. We see also this whole topic of platformization, complexity reduction. I mean, there's still a lot that insurers can do. The productivity has not really improved a lot. When you look at unit cost of the insurance industry over the last 20 years, not much has changed. When you compare it to other industries like automotive, you see continuous productivity increases. Not so much in insurance yet. So there is still a lot of potential in the industry. And a lot of these themes that you see here are just at the beginning and will accelerate in the next years to come. And in this environment, we believe, I mean, the insurance industry as a whole will also look different. And we believe the new insurtech landscape can be characterized like this with 4 big building blocks. So you have on the one hand, number one here, integrated insurers, really covering the entire value chain. So the big incumbents, the big brands, digitizing, leveraging their scale. focused quite often. I mean, we have in most European markets 1 or 2 focused local players that are winning, gaining market shares, capturing lots of profitability. Then connected with that, we see also ecosystems emerge, ecosystem orchestrators moving beyond insurance products to all kinds of services, prevention, and so on. Then we have also increasingly this whole topic of embedded insurance or white label providers supporting that basically cover the entire value chain except for the customer interface, which then other companies like Apple, Booking.com, and so on capture. So that's another theme, and we have, of course, also here in the room a lot of companies focusing on white label insurance. And we have industry utilities, as we call them, so specialized players for specific parts along the value chain, for example, in claims, operations, or pricing. And with that, Christoph will a bit elaborate how this landscape is evolving.
Thank you, Simon. Yes, so with that landscaping in mind and what Simon has just described a bit about how the landscape will likely going to look like, I think the question for also most of the people here in the room and the question we asked ourselves is, what can be the role and future value proposition for insurtechs in that? And let me start maybe with saying a few things around the importance of customer value contributions, and that this, of course, is something that is there, that has historically been also the strength of insurtechs. And we just picked here a couple of themes on the page. We could extend that list, I think, quite a bit more. But a few of the things worth noting. I think one is on the experience side, everything around demystifying insurance, decomplexifying insurance, simple journey, simple product, simple language is and will continue to be an important value creation contribution in our view. The same goes with transparency. Yeah, so everything that is pushing transparency for the consumer, comparison, tech enablement, and customer analytics as a second pillar. And the third thing, also obviously something very important and dear to the heart of, I guess, a lot of people here in the room, is around speed, seamless processes, digital processes, easy customer interfaces, and also making the entire value chain digital. So with these strengths in mind and with the landscaping in mind that Simon just said, we took a bit of a provocative view on the next page around where could insurtechs in the future actually play along this new landscape or this emerging landscape of players. Yeah? And as I said, it's a bit of a provocative view, so we tried to put for the individual archetypes a bit a lens of, is it more an enabling role or is it really more a challenger or a disruptor type of role? And I think, as you can see it here, right, so I think it's more or less for some of them, it's more the enabling type of role. I think if you were to cluster, probably more than the majority, up to 2/3 of insurtechs would fit more in that enabler role, especially enabling incumbents along the value chain. But then there are also some parts where we believe there's real disruption and challenging potential for the players. And we'll go through them in a bit, right? But it's really around focused players. It's around white label that is also emerging overall, that Simon said, and with a bit of caveats also on the quote-unquote utilities. Let's take a quick look at each of them where we believe there's actually some challenging and disruption potential. I think the first one, the most obvious one, on the focused models, yeah, so incumbents that are not, or on the incumbent space, traditional insurance space, but not on an international scale, more on a focused niche in a geography, in a line of business for a specific customer segment. I think there has been already in the past quite a lot of achievements. And again, it's just an example here, and you could extend this list quite a lot more. Also, it would look very similar if we were to look at the US or at Asia. But strong customer growth, strong focus on customer satisfaction and also digitization of the entire offer is something where insurtechs, in our view, are already a front runner and definitely will continue to be a challenger to the incumbents. I think the one thing to keep in mind here is a bit the size of the pie. Yeah? So we took a bit of lens here to slice the B2C insurance space in Europe. And I think if you look at it, like, it's basically 10% of the pie that would go to real insurtechs, as we would define it here. The largest part would still go to quote-unquote classical direct, which is more in direct brands of traditional incumbents. So the pie, if you multiply it, right? So if you have the total insurance space, round about 10% is B2C, and then round about 10% of this, so 1% overall, would be the pie for insurtechs here. actually with MGAs emerging there as one thing to call out. Maybe a bit quicker on the other two. So one is on the B2B2C space. So now we're moving into the white label argument. And here, embedded insurance, you've seen it also on the previous page, is something that a lot of insurers and a lot of also non-insurers are thinking about when they ask themselves, what is the next kind of growth vector and what is the next growth trajectory? It's a theme we see across different ecosystems. You again see a couple of them here on the page. A lot of people also in the other in these segments and others are thinking about, how can I tap into that value pool? And again, they're having the customer access, but there might be an opportunity, there might be a disruption potential for actually offering the white label platform below and bringing the insurance capabilities, partnering up and developing a real true B2B2C model. And lastly, on the utilities, so that one is a bit, if you remember the first page with the landscaping, with a bit of a caveat, because I think as we define utilities and as they're defined it here, it's basically a model that tries to bring a core insurance capability to the market. So be it in claims, as you see here on the page, can be in pricing, can be in other very technical areas, which was historically spot where a lot of experts, a lot of TPA models, a lot of niche and specialist companies, just a few of them here with logos, were already very successful. I think the question now, if we take the look into the future and on the industry outlook Simon was describing, the challenge and the challenging possibility and the disruption can really be in developing really an end-to-end view on this. So moving a bit away from pure experts and pure specialized providers into providing an end-to-end solution for the customers and for the insurers in that regard. So that's all. Trying to be a couple of examples on how to increase the pie and how to increase the opportunities from the traditional B2C space into something broader. But we'll have a look at the value angle in the second half year.
Yeah, then I think one important aspect is of course funding and capital. And when you look at that, I think there are a couple of very interesting developments. I mean, first of all, when you look at total funding of insurtechs in the last years, 2021 was actually a record year. So it really stood out. You see here more than twice the funding volume we saw in the previous years. And this year also looks good, to be honest. I think the bar more or less represents our estimate. Of course, the year's not over yet. And you see a couple of interesting points here. I mean, first of all, Germany and UK are still the core markets. Then we see that more and more investments go into later stage companies. So very clearly later stage, larger ticket sizes. And we see also that European insurtechs have now quite a sizable market valuation. So all taken together would be one of the largest insurance groups in Europe, just by market cap. So from that perspective, it still looks quite okay also this year. When you take a bit of a global view, you see the same. So also there, globally, 2021 was a record year. And in these bars, the blue section basically represents the larger rounds, the larger funding rounds of $50 million or more. And you see most of it and most of the growth really came from that. So later stage fundings. And also, I mean, quite large rounds here in Europe, as we put here a couple of names that you know. But so far, I mean, from a funding perspective, it worked out quite nicely for many of those, especially the later stage players, the ones that could accelerate. There are, of course, a lot of departures also in the market. So a lot of insurtechs that could not get funding. It's also important to mention when you look at this. So more and more polarization, we would say. Then, of course, we have to say also a word about valuation. And I mean, this was 1 year ago. So 1 year ago, I mean, it looked quite nice when you compared the valuation, which is the white bar, with the revenues or premiums of the insurtechs, which is the blue bar. I mean, the multiples were really, really nice. 1 year ago, the valuations were increasingly, skyrocketing. But at the same time, I mean, you are aware of this meltdown. So most of these players lost 80–90% of their value in the last couple of months. I mean, this is still from May, but in the end, if you take today's look, it's very similar. Still, I would say, I mean, they lost a lot, but the absolute value, which you see underneath in billion US dollars is still relevant. I mean, even a Lemonade, I think one of the big players here was 1.4. I think today 1.5 billion is still value, but significantly less than it used to be. And I mean, what is the reason for that? There are a couple of reasons why this happened in our view. So we name here 5 different reasons. The first one is, I mean, we had high valuation levels. Just, I mean, comparing premiums, as you saw, with the actual valuation showed you, I mean, this was very, very different from traditional insurance groups. Then, of course, the interest rates had an impact. Interest rates increasing, continue to increase. That has an impact here. Capital is much more expensive. We have a general decline of tech investments, which also hit the insurtech sector. We have, especially in Europe, but globally also political and economic unrest, of course, unfortunately. And last but not least, we have also what we call here a bit this insurtech business model crisis in some areas. So what Christoph showed, I mean, B2C insurtechs, not really disrupting, I mean, growing, but overall just capturing 1% of the entire P&C market. So that, I mean, people expected to be different a couple of years ago. So you could also say, I mean, some models work, others don't work, and there was a bit of a crisis. So all these taken together, I mean, explain why the valuations went down so much. So on the capital side, still okay, but valuations, I mean, heavily hit. And you could say now, oh, this is a very, I mean, difficult environment. We have potentially recession coming. So what will happen? But we want to end this with a positive outlook, and that Christoph will do. I think you might have heard this saying from Ayrton Senna, which is quite often now in the media, that you can't overtake a lot of cars in sunny weather, but during raining time, actually, it's possible. I think we believe this also applies to the insurtech sector, and it's actually also a time of opportunity.
Good. And the question is now really, and that's what we want to end this with, is the how to capture this opportunity. Yeah? So there's been a couple of headwinds and tailwinds, as Simon said, but the question is how to now get to this opportunity. And we want to provide you with a couple of lenses and a couple of thoughts around where to focus on, or what might then really be the how to win there. First of all, very quickly around the size of the pie. Yeah, so we had that earlier already a bit in there, but we wanted to give a bit of an estimate around how big the pie will be. For this to do, we looked at our neighbors at the fintech space, where roughly 20% of the value comes from traditional banks. And we all know it, you cannot directly translate, but if you were to take a similar lens for the insurance space in the future, we estimate that for the European industry, this would equal around 200 billion in value by 2030. Comparing this to a $4 to $5 trillion market cap for insurance, I think it's still quite sizable, and it's gonna increase. That, of course, requires capital. That requires fuel to run. Also here, you see the estimate around 5 billion in annual funding for the next years, which is a little bit less than double of what it is today. But I think the numbers are there. The question is, as I said, how to capture a share of that pie. And what we did is we thought, who better to ask than the people who do this for a living? Yeah, so we asked around leading investors and analysts what, in their view, actually drives value at scale. And surprisingly, or maybe not so surprisingly, we found 3 common themes that I want to quickly mention here, and also give you a bit of food for thought. So the first one is also probably the most obvious one: customer ownership. Yeah, so we talked about it already earlier, but basically already today, the capability and the ability of frequent customer contacts and access to data and the ability to monetize data basically translates directly into value. The second thing is, we called it here 10x improvements, but it's basically the ability to sustain profitable growth at the fast and historic rates, especially when the company reaches a specific size. The question is, how can you sustain that growth in the future? That's one of the things the colleagues on the analyst side and the investor side obviously look very closely and see how companies manage. And the last thing, probably often forgotten but equally important, is really performance culture and talent. Yeah? So the ability to execute, not only on the strategic side, but also more complex initiatives that come with size and that come with overall growth, is a very important one. Combining that with having top-notch talent to drive this. The quote from that Simon just said, I think was also supposed to end this. The idea is, and we wanted to give you a couple of thoughts around what to do different tomorrow, or where you can or should think about, in our view, if you want to capture parts of that. Yeah, and you see parts of these things written here, right? I think the rain that was mentioned in the quote is not only literally today, but can also maybe be a bit applied to the current situation. So taking decisive actions now in a time where there's probably more uncertainty than in the past, around the productivity angle, around resilience, but also around strong strategic bets and opportunities, can lead to a position of strength in the future. And we wanted to end this with basically these thoughts around that, giving you a couple of ideas on how to take that opportunity in the future. Thank you very much.